Hi, I'm Jake Falcon, the founder and CEO of Falcon Wealth Advisors.
And I'm Cory, the co-founder and COO at Falcon Wealth Advisors.
And for today's topic of this video, we want to go over our process. So whether you're a potential new client kicking the tires and wanting to see what we're all about, or you're an existing client that perhaps have been working with us for over a decade and you wanted a quick refresher, that's who this video is for. But before we go into our process and deeper value, I wanted to go into our team, right? And so what I'm going to do, Cory, is I'm going to share my screen and we'll go through some slides together. All right?
Perfect.
Okay, so again, welcome to Falcon Wealth Advisors. And here's a little bit more information about our teams specifically. We currently manage over $500 million for clients in 23 states. About half of our clients are retired and half are still working. Now, I'm a chartered retirement planning counselor, as are you, Cory. Why don't you go into a little bit of detail of what that means?
The chartered retirement planning counselor designation that Jake and I both have pertains, again, specifically to that retirement planning. It is the accreditation or designation that you can earn as far as retirement planning goes. So Social Security, pensions, healthcare, 401ks, IRAs, Roth IRAs, et cetera. That is what we are both, well-trained and well-versed in the conversations that we have with clients every day.
Perfect. Yes. We also have a certified financial planner on our team, as well as a CPA. So what we've done is you and I focus on retirement planning for our clients. And then there's a team of professionals around us that also chip in and work with our clients. One thing that makes Falcon Wealth Advisors unique, and again, we're based in Kansas City, but we have clients in 23 states. The item that makes us unique, though, is we function as what's called an ensemble practice, which means that, Cory, you have clients that you may work with, and so do I, but that doesn't mean that we don't share in our advice and our intellectual capital. So you and I will check in with each other. We'll pull on the other team members. Again, we've got 10 plus team members working with us, working for our clients, all looking to accomplish the same goals, which is ultimately helping our clients live the retirement lifestyle that they've worked so hard for.
And the beauty of that for our clients and prospective clients is that no one is relying on any one person.
Right. Perfect. So enough about us. Let's go into our process. And at Falcon Wealth Advisors, we're really going to talk about two things on this video. One is very thorough, comprehensive. I hate that word comprehensive. I feel like every advisor uses it, but it is comprehensive financial planning. And two, investment management. And so that's what you and I are going to talk about today.
Perfect.
All right. So to kick off our process, every single person that we meet with starts with a goals assessment. And that's that first meeting. Typically takes 30 minutes to an hour in our office, if you're comfortable and vaccinated, or remotely via Zoom or conference call. And that's really a get to know meeting. And more importantly, we want to drill down and we want to find out, what does money mean to you? Or why is money important to you? And what are your financial goals? And why are you coming to see us? Right. So we ask very thorough questions. Typically, it's either with me or you, Cory, and one of our financial planners.
Yep.
Right. So that's the first meeting. After that, we go and we crunch the numbers. And Cory, maybe why don't you talk about what that second meeting looks like?
Sure. So in that second meeting, first and foremost, what we'll do is review everything that we gathered in our initial consultation to make sure everything is appropriate and the numbers are reflected correctly. We can, of course, make adjustments as needed. But from there, the whole idea is for us to show someone, on paper, in their financial plan, here's what things look like for you long-term based upon what we've talked about, based upon what you're, saving and contributing to your retirement accounts and your overall financial goals. So we'll summarize, make sure we gathered everything appropriately, show you what the long-term financial plan looks like, provided a recommended allocation for how ultimately we should invest the funds, in addition to any other recommendations. And then, of course, we talk about what it all costs if folks are interested in working together.
Yeah, perfect. You said it's in paper. It's funny. It's not in paper anymore. It's crazy.
Electronically.
In our digital world, it used to be in paper. We used to print out these thick booklets and we'd actually give it to you. Now it's all online. And so again, we'll have it pulled up on a television. We'll go through it page by page, talk about different scenarios. So not only what your 30-year plus trajectory looks like, also how we're going to go about accomplishing that investment-wise. And then, like you mentioned, what it all costs to work together. Now, that's only the beginning, though, of working with Falcon Wealth Advisors. I think where our value is truly added is in the ongoing reviews, right? So whether that's once or twice a year, over the phone or in person, we are proactive with each and every client, reaching out to them to update their financial plan. because the important piece to remember here is a financial plan is not a roadmap, right? It is not set in stone. We are human. Our lives are dynamic. Stuff happens, things change. And so most importantly, we're proactive. We reach out to our clients, we review with them, recrunch the numbers, redo the plan, look at the performance, and all of that is part of our ongoing review process.
Absolutely.
All right, good. So that's at a very high level. So drilling down here a little bit, well, what do we actually do, right? Are we just going to be pushing products on clients, or are we going to be talking about insurance? What is it that we really do? And Cory, I'll go over these top three, and I'll let you go over the second three here. So again, it all starts with a strategic plan. So what does that mean? We want to know your financial goals. When do you want to retire? How much money do you want to spend? Do you want to buy a second or third home? Do you have debt? Right? All of those things go into the strategic plan, along with Social Security. Do you turn it on at 62? Do you turn it on at 70? Anywhere in between? All of those things, Medicare, all of that is part of that big overarching strategic plan. Second, behavior management, right? So how are you saving in your 401k? Do you have an IRA or Roth IRA? Do you have college savings plans for your children or your grandchildren? Right? Where is all your buckets of money, and how are you investing it? Most importantly, with this behavioral management issue, is that clients oftentimes will let short-term emotions dictate long-term investment decisions. So one of our jobs as chartered retirement planning counselors is to make sure our clients remain disciplined and focused in times of uncertainty. And then the investment solution, which you and I are going to go into here in a little bit, we're very pure and transparent as far as that's concerned. We literally pick stocks and bonds and options for our clients, right? So there's no mutual funds, no exchange traded funds, no annuities, none of that stuff. We're literally building out portfolios for our clients and monitoring that every single day for them. Cory, what about the second half of things that we do?
Yeah, from there is risk management or insurance planning. Jake and I, both of us, we are licensed life insurance agents. We don't sell life insurance. We have, other partners that we work with, if that even fits into a client's financial plan. But what we'll do going through that process is make a determination of, whether or not someone needs to have life insurance, how much they need to have. We'll talk about healthcare, Medicare, et cetera, what those expenses look like in retirement. And then also long-term care, if that makes sense, or if, a lot of our clients are in a position where their financial plan can allow them to self-fund that. But overall, insurance planning does belong in the more comprehensive, sorry to use that word again, Jake, financial planning that we're doing for our clients. Beyond that is estate planning, which again, we're not estate planning attorneys, but at a minimum, what we will do for our clients is make sure that their beneficiaries are set up appropriately on their accounts. And we will review those ongoing because life does happen and things change. We can certainly bring in an estate planning attorney if we need to have a more detailed conversation around a will or even setting up a trust. And then also charitable giving or planned giving is a big part of the conversations that we're having with our clients, not only for the human equity that comes from that, or the feel good feeling that comes from that, but also if it can help someone from a tax perspective. So all of that is encompassing under estate planning. And then lastly is just overall financial organization. So whether it's lending, budget analysis, debt reduction, whatever it might be, if it has to do with money, we can do it. And if it's not something that we do here in our office, we have other professionals that we partner with to ultimately help accomplish whatever it is that needs to get done for you and your family.
Perfect. And so as you can see, if you're watching this on our YouTube channel, there's a lot going on. And the most important thing to remember is that Cory and I aren't trying to go at this alone. We have a team of professionals around us. We have external partners that we will refer clients to if it's a little bit outside of our expertise. But the idea is that we've got a group of people focused on all of these things for our clients every single day. And this is part of what we do in our offering at Falcon Wealth Advisors. All right, very good. So now this is, and I don't expect people to be able to see this, and this is a very generic sample of what a financial plan may look like. So if you're watching this, you may have never had a financial plan run for you. And so what this is basically just shows you kind of what a plan does. So again, it'll basically have all of the facts or the intake here. It'll look at cash flow, net worth, a 30-year projection, when do you take Social Security, and then break it down year by year. We're using a new software program, new to us, it's not new to the industry, called eMoney. That's not what this is. But what eMoney does is basically everything that you're seeing on here, it allows us to run reports and then upload it onto the eMoney platform so that our clients can access it, which is really cool. And so we can run a million different scenarios, but the idea is that you're going to have your own custom financial plan, something that looks similar to this, that we can upload on directly online, and you can view it anytime.
Perfect.
All right, good. So that's the planning part, right? Very thorough conversations, Cory. We want to get deep with our clients, or as deep as they want to get. We want to create this plan. We want to update it regularly. And as their lives change, we change it and we adapt. So then clients will say, okay, that's all fine and dandy, Jake, but how are you actually going to invest my money? Or how do I'm going to get access to it to eventually live off of it? And that's what this chart talks about. And so on the bond piece, I'll talk about the bonds, Cory, and I'll let you talk about the stocks. So on the bonds, again, the idea with our clients is we want to have a minimum of 5 years worth of income in bonds, right? So if you're pulling $50,000 a year from your account at Falcon Wealth Advisors, we want to have anywhere from $250,000 at a minimum to $500,000 in this bond bucket, right? And the idea is that bonds, while there's no guarantee there, they're generally, the bonds we buy at least, which are called investment grade bonds, their generally risk is far lower than your traditional stock.
Yep.
And so what we want to do is we want to have this bond bucket with 5 years, ideally 10, but a minimum of 5 years in there, kicking off interest every month or every quarter or every 6 months. And what we do is we use that to funnel money to our clients' checking accounts in retirement. So it provides an income stream and it provides somewhat of a damper against volatility. Now, there is one huge problem with bonds, though, is that they typically don't grow enough to protect what's called purchasing power risk, or the idea that you're going to run out of money. So you can't have, most people can't have all of their money in bonds because they run the risk of running out of money. So we've got to have a stock allocation. And Cory, why don't you talk a little bit about the stock allocation?
The stocks are very much part of the portfolio because they are designed to provide the long-term growth. So for all of our clients, just like Jake mentioned, the 5 to 10 years worth of planned distributions or expenses is what we want to set up front to make sure that you have that money in bonds so you can take distributions comfortably in retirement. As far as the stocks go, when we think about it that way, that means for our clients, any money that they have invested in stocks is typically not money that they're going to touch for 5 or 10 plus years. It's critical to have that growth component because people are living longer, right? So for some folks, retirement looks like 20 to 30 plus years. So we know that the growth component is still important, but it frankly takes the emphasis off of the day-to-day performance of the stock market when our clients know that they have the income that they're drawing from their accounts invested outside of stocks in the first place. Because we know over time, at least historically, that the stock market has provided premium returns, but the price to pay for that, of course, is volatility. So things can get nasty in the short term, and we know that. We've been reminded of that in recent years. The important piece for our clients is that we do not have to sell any stocks when they're down in value for them to take their planned distributions. And in fact, if the market drops enough for clients, we'll take the opportunity to put money to work when stocks are much cheaper.
Right, exactly. And if somebody is still working and they don't need the income from bonds, we will just reinvest. That's what these arrows are for. We'll just reinvest it all back into the portfolio, right? So you say, okay, Jake, that's fine, but I'm 5 years out from retirement.
Yep.
Perfect. As the bonds pay interest, instead of sending it to you, we're just going to reinvest that money, right?
Yep.
And so again, we're going to have that appropriate allocation, and we're building all of our clients, whether they're pre-retirement or in retirement, to have this pool of money, at least 5 years, ideally 10 years worth of money in this bond allocation. Okay, good. Perfect.
Yep.
Now, even though we are talking about stocks and bonds, and we were just now talking about short-term volatility, the most important piece here is to recognize that we don't try to time the market. You shouldn't try to time the market. And frankly, nobody can time the market, or at least nobody's proven it yet to do it consistently, accurately. So we don't do it. We're not going to try to do it. What this is this a Brinson study, which is probably one of the most famous studies ever conducted on money. And what they concluded was the number one driver of performance is that asset allocation. So not when do you buy and sell, but how much do you have in bonds and how much do you have in stocks? That's what's going to drive your long-term performance. You can see here, market timing makes up a very little sliver of performance. And the reason is nobody can do it consistently, right? Stock selection adds a little bit. And again, that's one of the things that we do for our clients at Falcon Wealth Advisors. But ultimately, you can see overwhelmingly asset allocation is the driver. And that's what we're going to focus on with our clients. And our clients value that very much. Did I miss anything there, Cory?
I don't think so.
Yeah, it's very important that our clients remember this slide here. Whoops. Okay. All right. So to our most popular chart out there, and Cory, I'm going to steal the highlight on this one a little bit because it is the most popular chart. But if I leave anything out, let me know.
Okay.
Now, this is very complicated looking, but I can assure you it's very easy to read once you understand it. And I'll explain it today. So again, every column on this chart goes from 2001, 2002, all the way out to 2020. Okay. Now, every box on here is a main style of the stock market. And you don't need to know what they are. They're all defined on the next slide here, but they're ranked from top to bottom, from the best performing group to the worst performing group every year. And the whole reason this chart is in color is to show you that things cycle in and out of favor every year. So in our opinion, you can't just put all of your money in one of these boxes and let it sit there and hold on to it forever, because you're just going to be riding this wave. And in our opinion, buy and hold doesn't work. And you can see this orange box goes from the middle to kind of the top, then down to the bottom, then the top, then back to the bottom, and so forth. And so we don't like that. We don't want our clients just riding a wave up and down, right? To us, that doesn't make any investment sense. And so what we do is we put a certain percentage based, again, on your retirement plan in each one of these boxes. The total's 100%. And the idea is that anytime your percentage grows to be more than 5% of its target, we sell that extra 5% that's done well while it's up high, and we go down and we buy down here what's now low. And that forces our clients to sell high and buy low. Have you ever heard that one, Cory?
I have. I don't think I need to write that one down.
Right. And what's fascinating is it's very simple and easy to explain, but it's very difficult to accomplish. And the reason is because all of us are human. And when we see an investment or a sector of the market, technology, energy, meme stocks, whatever you want to call it, whatever you want to look at, cryptocurrency, whatever, you see it going up. Human nature thinks in linear terms. They think it's going to continue to go up. So they want to go, we as humans want to go buy that. But that's exactly when you should be selling it, because now it's high. And just conversely, when things are going down, we as humans get scared, we get frightened, and we want to sell that, stop the pain. But that's exactly when you should be buying something, because now it's low. So I relate it to getting your hair cut, mowing your lawn. Things grow at different rates all the time. And we at Falcon Wealth Advisors, as your portfolio grows at different rates, we're going to take the areas that grow faster and we're going to bring them back. And when things are down and low, we're going to take that extra money and we're going to go buy it to bring it up. And this is by far and the way, in my opinion, the most prudent, consistent way to manage money. And I didn't come up with this strategy. They've been teaching this at the University of Pennsylvania's Wharton School of Business, where both you and I, Cory, have studied. And in my opinion, it just makes a lot of sense, particularly for someone planning for retirement. This strategy is all about hitting singles and doubles and keeping you in the game versus loading up on one thing and risk losing all your money because you're swinging for the fences, or, just going all in or going for broke. Now, another important point to make, because we are fiduciary advisors at Falcon Wealth Advisors, we are not incentivized to buy or sell, meaning we don't make any more money off your account. We basically charge a flat fee based on the value of your account, but however much we buy and sell in these boxes, there's no commission earned with you and I, Cory. We're doing it because we believe it's in the best interest of our clients, and we're looking to grow their portfolio as well as protect it. All right, good. Did I leave anything out there?
I don't think so. You came through with the save there with the fiduciary point that you just made. I thought I was going to be able to toss that in there, but you were already on top of it.
Very important chart. A really core fundamental of the way that we manage money at Falcon Wealth Advisors.
Yep.
All right, good. Now, these are all just the definitions. Again, if you want a copy of this, you can simply email me at jake@falconwealthadvisors.com or Cory@falconwealthadvisors.com. That's Cory. A lot of people get that spelling wrong. But if you want us to send over a copy of this chart, we certainly can. It might be hard to see on the screen.
Yep.
Okay, Cory. So I mentioned earlier on in this presentation that we are stock and bond and option pickers, right? We don't use mutual funds. We're not using exchange traded funds, and we're not using annuities. Why don't you go over how many stocks approximately we buy for our clients and why?
Perfect. What we're looking at here, this particular chart, again, not something that I made up or Jake made up. This came directly from Wharton, as Jake mentioned earlier. And this is talking about how much risk can be diversified away, or as Jake just said, how many stocks does someone really need to own in their portfolio? So quickly here, just the way that you read this chart, on the vertical axis is the standard deviation, which is the way that we're measuring risk. And on the horizontal axis is the number of stocks in a portfolio. So as we can see, if I recommended for a client that we put all of their money in one stock, which I would never do, but if we did that, they could expect to see volatility. They could expect to see their portfolio up or down 30% in any given average year. It could be much more than that. But interestingly, as you start to add more stocks to a portfolio, you start to see that risk come down. Now here, it comes down to a point. You'll notice how it really starts to plateau. And that happens somewhere between 25 to 35 stocks in a portfolio. In other words, the additional diversification or the benefits that come from owning any more investments beyond 35 stocks, frankly, are trivial. The only way to diversify that additional risk below that red line is to not have money invested in the market in the first place. So whether you own 30 stocks, 300 or 3,000, the benefits that you're getting really are pretty trivial beyond 25 to 35 companies. And that's precisely why we take this approach for our clients. So we have control over how the money's invested. It's transparent so everybody can understand what it is that they own. And it's not overly complicated in other words, you can overly complicate things, but you're really not going to get any benefits for doing that.
Right. And so for our clients, we buy approximately 35 stocks in the portfolio.
Yep.
The idea is that we want to have all those colored boxes that I just went over represented, and we manage it in-house. And it's really that simple to us. You don't need to get complicated with layering on all these products and have hundreds and hundreds of stocks, because like you said, Cory, in the end, you're just going to overcomplicate it, and it's going to be very hard to manage and understand what's really going on in that portfolio. It doesn't make any sense to us. Excellent. All right, good. And then here to kind of wrap it all up, if you want to hear more from us at Falcon Wealth Advisors, I do publish a weekly show and blog called Upticks. So you can find it right here on this YouTube channel, as well as your favorite podcast platform. And Cory, what about your show?
The show that I host is called In the Money Insight. Again, it's right here on the Falcon Wealth Advisors Collective on YouTube. You can also listen to the audio if your podcast is your preference, wherever it is that you listen to podcasts. But in that show, I'll put out content just like Jake does each and every week about what we're watching, what we're paying attention to, what's relevant for our clients, with the goal of educating and helping people understand what their specific financial plans mean to them.
And that's perfect, Cory. To sum it all up here, clients choose to work with us at Falcon Wealth Advisors to enhance their financial literacy and explain exactly what their financial plan means to them. And I think that's very important, that we're really big on education. That's why we're kicking out shows, both of us, every week, and making sure that people understand, right? I get it that someone may not want to be able to go into the weeds like you and I do with the nuances of tax planning or investments or IRA rules and Roth rules and all those things that we know about and study, but they at least should be empowered to understand what's going on so that they can make good informed decisions and feel good about their retirement plan. Also, the four of us are on various social media platforms. I'm on Instagram, Twitter, LinkedIn, and Facebook, and so is Cory as well. And so again, if we're not connected, please feel free to send us friend requests. We love expanding our network, and that's another way that we do push out our content.
Perfect.
That is all the time that I have for you today. Cory, is there anything else we left off?
Nope, I don't think so.
Perfect. Thank you again for joining us. If you do want to go through our process, we do offer on a complimentary basis to go through step 1 and 2, right? So step 1 would be, again, a financial goal analysis. Cory or myself will sit down with you along with one of our financial planners, whether that be virtually or in person, start to carve out that financial plan. And then that second meeting, we'll meet and go over that plan along with our recommendations, and then go over what it costs to work together. So if you are interested in taking us up on that, please don't hesitate to send me an email, again, at jake@falconwealthadvisors.com, or Cory an email, Cory@falconwealthadvisors.com. Thanks again for tuning in. If you have any questions, we look forward to hearing from you. Otherwise, we hope you and your family are staying safe and healthy. Thank you.
Thank you.